the Nigerian Treasury Bills, called T-bills, secondary market, was said to have averaged, or let me say, was said to have seen some sort of bullish run, looking at a trend that we saw for last week, and it was driven by investor demand for some high yields amid the liquidity constraints that we saw, about 572.77 billion naira in terms of the constraints that was recorded. Now, the average benchmark yield dropped by 40 basis points week on week to 22.06%, and short-term bills saw mild demand, while mid-segment and long-term papers attracted more interest. Now, the FGN Bonds market also saw moderate activity ahead of the upcoming MPC meeting, with the average benchmark yield falling by 22 basis points week on week to 19.74%. Now, investors are advised to position strategically in high yield offerings across the yield curve. But then, to help us understand this better, I'm being joined by Muhammadu Saidu, who is the Senior Research Analyst at TrustBanc Capital Management Limited. Thank you so much for joining us on the show, Mr. Saidu.
Good morning, Lekan. Thank you for having me.
All right, you're welcome. Now, we also saw, according to reports, that investors actually demanded high yields. Now, looking at the various factors that might have pushed this bullish sentiment that we are seeing, how would you describe it, looking at the Nigerian Treasury Bills market?
In terms of what has been driving this bullish run in recent times, there are a number of factors, but majorly I can categorize them into three. The first to be the rollover risk. So we've seen a change from the GMO where they are strategically managing their rollover risk recently, where they're not issuing as much as they were issuing last year. Secondly, there's also the projections of the Nigerian economy stabilizing and the improved investors' confidence. So investors are trying to lock in high yields, as they've seen a trend of declining rates in the past couple of months in the Treasury Bills primary market auction. Thirdly, the execution of the monetary policy risk easing and decline in inflation, as we have already seen with today's news coming out today of the inflation rate going down based on the new rebasing of the inflation. So those are the three major reasons I feel are driving this bullish sentiment.
So what should investors consider when, of course, we talk about positioning their portfolios?
Well, majorly they should consider reinvestment risks, because coming in now and locking in rates that are more favorable compared to, we don't know what rates are going to be like next year. So they also have to consider investment risks, whether they go on longer term maturities like bonds or go for other classes of assets such as equities. But it's going to be interesting, in this coming is going to be interesting to see how the dynamic change, because we have the CPI data coming out today, we have the NTB primary market auction tomorrow, and also the MPC meeting conclusion coming out on Thursday.
Okay, so looking at the MPC meeting, I'd like to get an overview of what their policy direction would mean, looking at the various factors as regards, of course, the market and Nigeria's economy.
Well, the major consensus right now is people feel like the regime of hiking interest rates is over, where and we're seeing signs of it with the new CPI rebasing. An article from these days came out today saying inflation rate was dropped to 24.8, which is going to be massive news for Nigeria, because we've seen the MPC push back the date for the MPC meeting because of the inflation rate. So with positive signs like that, we expect the MPC to either hold or to ease rates today on Thursday.
How will the upcoming primary market auction impact liquidity and investor sentiments in the fixed income markets?
Well, in terms of liquidity, we have seen the liquidity in the financial system has been very tight in the past couple of weeks. But we still expect that to tighten further with the primary market coming up. But we've also seen a trend in the last couple of auctions where the system, but we are seeing record number of subscriptions. Like the last auction, we had about 1.4 trillion in deficit. The system was 1.4 trillion in deficit, but subscription was still around 3.2 trillion. So we also have to consider factors such as non-bank financial institutions bringing in liquidity into the system as well.
So now, in terms of investment strategies, what role do you think corporate offerings would play?
What do you say? I could come again.
Yeah, I said in terms of investment strategies now, what role do you think corporate offerings would play?
They'll play a significant role this year because with the trend of rates declining and government securities continues, people will be more attracted to corporate offerings. We saw last year there were a lot of new CP issuing, a lot of people going to the CP market, a lot of corporates using the CP market, and I expect that trend to go even further this year. So it should be interesting for corporates going to the market this year.
I'm even wondering, how attractive is the FGN bonds compared to other instruments that we've seen so far play out?
This year, FGN bonds have become a bit more attractive, especially with the rates declining in the Treasury Bills market. Because unlike the Treasury Bills auctions, we've seen the opposite in the bond auctions where stock rates have been increasing, so where stock rates have been going up while stock rates are going down in the NCB market. So it's a bit more attractive, but also there are also other asset classes that are doing very well right now, just such as equity markets. There's stability in dollars, so there's also opportunities there as well. But it'll be interesting in the next couple of months to see how things really develop with the MPC and everything.
All right. Now, how does Nigeria's inflation rate impact investor appetite for fixed income securities?
Well, Nigeria's inflation rate is what determines really a real return, because we're currently in a current regime where there's negative real return, where inflation is above what government securities are giving us. So if we see a decline in inflation, we should see a regime where real positive interest rates come back into play, and which will be a major driver for Nigeria, especially compared to because we're trying to get a lot of foreign investors, and if we can get positive real investment, real positive return, we will see a lot of foreign investors come in, and the Nigerian market will be more attractive to them compared to other emerging markets as well.
Still, let's even look at the interest rates now. Are there any probably domestic or maybe some other factors that might influence movements looking at the coming months?
Well, in terms of factors that may decline, and domestically, it's most likely going to be inflation, the fiscal policies, and the DMO's borrowing strategy. While externally, it's going to most likely be the Fed policy rates, because if Fed is going to drop rates, it's going to be more appealing for Nigeria. But if rates are going to stay a bit higher in the US market, it might be less attractive. The Nigeria market might be less attractive for foreign investors, as well as oil prices. Oil prices are majorly what drives the Nigerian market, because if there's less, oil prices are less, government tends to want to borrow more because revenues are reduced.
So with this kind of sentiment on the part of the investors, how do you think the foreign capital inflow would look like?
I feel like going into this year, there will be an increase in foreign capital inflow, because the Nigerian market is sort of stabilizing, where we have seen the reforms starting to yield results, and we've seen in the past, since the beginning of the year, like the forex markets, other asset classes are beginning to stabilize, and start to see results starting to come in. So it should be interesting to see where the direction of the Nigerian market in the next couple of months.
All right. So to wrap things up, what strategies do you think that retail and institutional investors can actually adopt to maximize returns? I mean, we're looking at a very volatile, or some sort of a volatile, fixed income market.
Well, they also have to keep an open mind, because the market is very dynamic at this point. So they have to be open-minded and be acceptable to change, because there are a lot of changing dynamics that they have to really factor in. So they might want to diversify their portfolio, where they'll have such asset classes in equities, fixed income, maybe longer-term instruments as well. especially with the equity market right now, because the equity market right now, there's a lot of opportunity, especially with the reinvestment risk playing out, because we're seeing treasury bills, like the next primary market auction that we're expecting on Wednesday, we're expecting over 500 billion net repayment into the system. Where would that money now go into? There's the people that go into the secondary market try and get maturities there, but some of this liquidity will also find its way back, which will drive bullish sentiment. So they're positioned in different asset classes that will see them generate a lot of revenue coming year.
Okay. Muhammadu Saidu, Senior Research Analyst at TrustBanc Capital Management Limited. Thank you so much for sharing these insights with us on the show.
Thank you for having me.